Yeah, so Chinese shipbuilding capacity is 200 times the shipbuilding capacity of the US, right?
200 times?
Yeah, exactly, right? China,
no, that's shipping capacity, though. What about actual tonnage?
No, shipbuilding capacity, right? Even in actual tonnage, there's hardly any US-built vessels which are trading in the global fleet, right? If you look at different sectors, if you look at container shipping, that's almost 30% Chinese built. If you look at dry bulk, that's closer to 45%. Tankers somewhere around 25 to 30%, and gas carriers somewhere around 10%, right? But if you look at the order book, almost the three major sectors, 70% of the order book is going to be Chinese built, right? So China has now 60% market share of the global shipbuilding, which they've taken away from, let's say, Europe 20 years back, and then Japan and Korea as well. So there is no alternative to Chinese shipbuilding, and that's why this is going to be hugely disruptive.
Okay. So listen, I mean, it seems to me the simple answer is for the U.S. to build more ships, right? The problem is there is no capacity, or very little capacity, and it takes time and it takes investment, right? The penalties, are they meant to partially fund the rebuild of capacity in U.S. shipbuilding?
That's what they're trying to do, right? But shipbuilding is complex. It's not just about capital. You're talking about the technology, you're talking about the manpower and the whole ecosystem and the value chain, right? If you have to build, let's say, a LNG carrier today, you need those gas tanks, right? You need a lot of engine capacity, a lot of suppliers, and China has built that over the last 20 years. To put in perspective, like I said, it was close to around 8%, China's shipbuilding capacity market share back in 2000. It's 60% now, right? So it's very staggering for us to see how this would be implemented, and the cost is going to be tens of billions of dollars.
And I think we talked about this last time you were on, Rahul, and I'm curious to pick it up, conversation. I mean, the Chinese are number one now in shipbuilding, right? Before the Chinese were number one, it was the Koreans. Before the Koreans, it was the Japanese. The Koreans and the Japanese, how much can they aid and abet a resurgence of U.S. shipbuilding capacity?
They will certainly benefit, because there will be a two-tiered market if this goes through, right? When we say if this goes through, is because it's still open for comments. I think March 24th is when that commenting period ends, right? But there's not much capacity available even in Japan and Korea. The shipyards, because of what is happening with the global trade, still continues to grow, are full until 2028. There are ships in terms of LNG carriers which will be delivered in 2031. So there is no alternative, and what that means is if you take away the Chinese ships from the US trade, that creates a significant capacity reduction, right? You're going to be creating a two-tier market, higher asset values and freight rates for the Japanese and the Korean build, and then the Chinese ships are discounted. So effectively, you are penalizing the U.S. exporters as well as importers as well.
The entire industry is holding its breath at the moment. And Rahul, what are trade flows telling you then, given the fact that front-loading and advance buying before the reciprocal tariffs kick in potentially on April the 2nd is such a big theme and issue out there?
Yes, I think it can be delayed to a certain extent. It could go into second half of this year after the comments. But the way I think the Chukong Holdings or Shenzhen Ports Holdings port sale also signals where the wind is blowing, right? So I think there is a very likelihood of this going through. Even with the industry pressure, it might be in a different scenario that they do adjust some of these things. But this is going to have a huge impact on what we call the container shipping or the merchandise goods, right? So container shipping, essentially, you will have to pull out some of these vessels. You will have to bunch shipping services together, bunch cargoes in the ports you visit. That is higher freight, right? In certain cases, people, or as well as the industry, is expecting a few $100s per TEU, right? And you're talking about hundreds of millions of dollars, right? So there will be trade shuffling going into Canada, Mexico, and so on.
Rahul, you would know this, right? If anybody would know this, you would know this, right? As a percentage of a finished product's price that is sold to the end user and consumer, right? The transportation part, how much of that does that account for?
Very low, right? So in a sense, for the container shipping, that's very low if you spread it across the goods being carried, right? So on the, let's say, a sneaker, it will cost minimum cents. But the fact is, for the carriers, it's a significant cost, right? MSC CEO came out and said for per visit, it's going to be $1.52 million, maybe higher. So we're talking about still tens of billions of dollars spread across the whole container shipping or the supply chain. But the inefficiencies in terms of fleet, that leads to higher port congestions. You have to build more. And we saw what happened at COVID, right? Very significant freight rate increases to the tune of $10,000 to $15,000 per TEU. Rates have come off, but there is a scope that we could see the rate rise again.